yesterday, tumbling 7.8% in early trade after investment group Remgro said it was selling its 11.8% holding in the group to focus on core assets. This is a show that's enjoyed a very strong run. The group said just last week that it expects a 70 to 90% rise in headline earnings for the year to September, adding to the 20% plus rise in that share so far this year. With more, we're joined now by CEO Andrew Marshall. Andrew, thanks very much for coming in this afternoon. Given the strong run we have seen in your share price, 20% plus over the course of the year, makes sense for Remgro to sell at the top if it isn't going to be not core to its portfolio going forward, doesn't it?
Yeah, they had signalled a while back that they were looking to exit any investments that were non-core and where they didn't have a controlling stake. They only had an 11.8% stake in Nampak, and they were really going to choose the right time that they felt appropriate to sell. And clearly the share price has moved, as you say, very significantly from about 18 months ago, it being 12 Rand to 19 Rand now. There's been a significant appreciation in share price. There's also been a lot more trading in the share, a lot more positive investor sentiment. So I think for them it was the right time.
Your latest trading update saying headline earnings per share will be by as much as 90% stronger. So a nice boost there. And we know it really had to do with the UK operations. Give us an indication of how much of an impact the World Cup had on these figures.
Yeah, very little.
It's surprising because you did say that you were expecting a nice shot in the arm.
We were, and we saw it in some of the sectors like snacks, peanuts, crisps, things like that. But relatively small, and if we look at across the beverage sectors, the food sectors generally, it's been very, very little the impact. So it hasn't really had any noticeable impact on our results.
Of course, you do supply packaging to McDonald's, to SAB Miller, also to Coca-Cola, and one would have thought that lots of Big Macs and Cokes being eaten and drunk during the World Cup.
Correct. One would think that, and but certainly our sales didn't reflect that. And I think, you know, just confirming what your earlier speaker was saying, we're seeing volumes fairly flat both in Europe and South Africa at the moment. Africa is different, we're doing quite well there in terms of increasing volumes. But we, year on year, and we're a fairly good indicator, I think, Nampak, because we are in so many different sectors, volumes remain fairly flat year on year, and that's despite the World Cup.
So where's the kicker to your profits coming in then, Andrew?
For us, it's the turnaround of our non-performing operations. So we had some very significant loss makers in the business that we've managed to sell off 7 smaller loss-making businesses. And then the 2 bigger problem children, we've managed to turn the one from a significant loss to a profit. That was the UK business referred to earlier. And then our corrugated business, which lost 250 million Rand last year, we've managed to significantly reduce the losses. We haven't completely reversed them, but we've significantly reduced them. So that's really what's caused the kicker that you're talking about in terms of our headline earnings being up the sort of 70 to 90%. Operating profit in the same announcement, we were talking 130 to 150% improvement. So it gives you an idea of the turnaround. So it's really been achieved on the back of fairly flat volumes, but turnaround of non-performing businesses.
Well, given the lackluster performance in South Africa, we know that you are focusing on African expansion as well, and you are focusing on the likes of Angola, Zambia and Nigeria, and also just looking at the beverage can plant in Angola, $150 million investment going forward. Tell us about some of the challenges that you are faced with on the African continent. We know electricity is definitely one of them, and logistical issues as well.
Yeah, we are in 12 countries in Africa, and in most of those countries we have more than one manufacturing operation, so we're quite well established there. And we find adding on incrementally to each of those operations fairly easy. We have management in place, we understand the business, the culture of doing business, so those operations are relatively easy to add on other products that we're not already doing. So in Nigeria, as an example, we may be making cigarette cartons and metals in 2 separate factories. It's relatively easy to add on, let's say, beer labels, because we have the existing factories, facilities, we're doing the power and things like that. The bigger challenge is going into the newer countries where we're not operating. And Angola is a good example of that, where regulatory approvals delayed the project by over a year. It's the $150 million project, as you say. So we've had significant delays to that, but we now are not back on track, but we are now expecting to commission in February 2011. So I think it's more, the challenges are more when it goes into a brand new country where we're not already operating. But our focus will tend to be on growing incrementally in the major countries in which we already operate.
Now, are you going to have a growing focus on Africa and perhaps take away some of the emphasis that South Africa makes in your results going forward from here? Will Africa be a bigger part of that?
Undoubtedly, just to put it into perspective, our exports into Africa are about 1.8 billion a year. our existing sales on the ground, manufactured products in Africa, about 1.7 billion. So about 3.5 billion out of our 19, 20 odd billion turnover is already in Africa. And certainly as Angola grows, Nigeria, Zambia and all the other countries in which we're expecting larger growth in South Africa, we expect the proportion of our African sales to grow. And clearly margins in Africa are higher than we achieve in either Europe or South Africa. So one of the, obviously a significant reason for wanting to grow there as well.
Andrew, tell us what your relationship is with the likes of the commodity cycle at this point in time, purely because we know that commodities have increased significantly. We know you work with tin plate, we know you work with aluminium and various other raw materials. How does that also sort of impact the currencies, the various currencies that you're working with at this point in time?
Yeah, I think from a currency perspective, we really are selling to the manufacturers of South Africa, the food and beverage manufacturers, and as a result we would prefer a weaker currency because they are not exporting as much as they have done in the past. So Coca-Cola, as an example, who would have supplied the DRC from South Africa, are now supplying it from other countries where they have a weaker currency. So instead of selling cans to Coca-Cola in South Africa, who would then fill and export the cans, that's been done somewhere else in the world. So we have seen a major impact there, and those so-called indirect exports, if you like, have been adversely impacted by the strength of the rand.
The raw material perspective.
On the
as
raw
well.
material side, what we're seeing there is that generally raw materials are starting to increase in price, so steel, tin plate, paper, things like that. We clearly look to move those increases onto our client base. They clearly push back. But we are seeing increases happening in most of the packaging materials right now.
You talked about the re-rating on your share price over the last 18 months, up from about 11, 12 rand to 18, 19 rand. You said also a lot more trading in your shares recently. Do you think that there is going to be appetite for those shares once they are placed on the market by Remgro?
Yes, well, the shares were placed yesterday. They placed 78 million shares on the market, and by 11 o'clock all had been taken up. By 12:30, the advisors, RMB, in fact, closed the book because they were already 2 times oversubscribed. So there's been quite a healthy demand for the shares. I think we do in Nampak have very good core businesses, and our challenge previously is that we've had all these underperforming operations that have been offsetting the good results from the the good performers. So I think that's what we're actually hoping to continue achieving as we fix these non-performing or sell the non-performing operations. Our core businesses should continue to drive the Nampak results, and clearly our growth in Africa we expect to be one of the big conduits for that.